bring in an outside voice here to help us make sense of everything that's been going on. And for that, we have James Bianco of Bianco Research, President and CEO. And Jim, I mean, help us with what we're seeing play out in the market, because at these current levels, the S&P has jumped more than 40% from the low it hit back in March. The Nasdaq not too far from the record highs that we saw last week. Do you think, where do we head from here? Are we due for a period of consolidation, or is it stopping it at this point?
This is the power of the press. I've heard, Annie and Rick mention it, and I have to agree with it, that it is a very powerful force when the Fed comes in, especially when Jay Powell said yesterday in his testimony, why are they buying corporate bonds? Well, we're there just in case something negative happens. He basically announced they're putting a floor on this market. This isn't a market that investors can't lose. And I think that's why you've got the day traders and all of the Robin Hooders just flying into this market. They understand that they have been given a riskless market, and that's the way that they're treating it. Now, I don't believe that's going to last forever, and I think that will run into trouble at some point down the line. Go down with the Fed basically running its printing presses at high speed and having Dave Portnoy scream to all of his minions, buy until your hands bleed, and that's going to be very tough for now. There will be a time when it goes down, but I don't think it's going to be right away.
Well, and Jim, speaking of that, it's interesting because you had a recent op-ed just talking about blaming the Fed basically for the disconnect that we're seeing in the markets. And you're saying that the next time the markets stumble has to do with some of those retail investors, those small investors that you just briefly mentioned when you talked about Dave Portnoy there. But you were saying that we could even expect more aggressive action by the Fed, such as buying equities. So do you think that that is something that could potentially be on the table? And at what point do you think the Fed would actually do that?
It's not on the table if you put them under sodium pentothal today and ask them if they're going to buy equities. The answer is no. Have the market correct 10 or 15%, put them under sodium pentothal and ask them the question again, and you might get a different answer at that point. But I do think that the point is that Jay Powell, going back to a 60 Minutes interview a couple of weeks ago, has made it very clear that they have almost unlimited capability, and he intends on using it to make sure that the market does not go down. That's why I think the market's going to keep going higher. And yes, I want to emphasize that disconnect. By most measures, it's overvalued, and they don't matter. And by most measures, the economy is rebounding and getting better, but it's probably going to look more like, everybody likes their favorite explanation. I'll go with the square root. We're having a little V bottom, and then we're going to stop before we get back up to the all-time high in terms of the economy, and we're going to have it stall out from there. But that doesn't matter either right now. And I think that this market is just going to continue to be the power of the printing press, and it will continue to go that way until something changes it. Now, that could be tomorrow. That could be a year from tomorrow. But unless that something comes along, I think the path of least resistance for the near term, the next couple of weeks, few months, is higher in stock prices.
Hey, Jim, important question. What's the name of your cat in the background there over your right-hand shoulder?
Juliet is her name. She's 10 years old.
Hi, Juliet. So another, a less important question. How would you articulate the risk in the Fed propping up the stock market? And have you seen any indication from Powell or anybody at the Fed that they understand there's a risk in doing this?
I think that I think what the Fed has done, and he said it again today, is they've turned the argument around. You and I probably think the stock market measures the economy. They think the economy measures the stock market. So they think if we push stocks up enough, it will create jobs, it will create GDP, it will make the economy better, is what is their thinking on this. I think that's wrong, and eventually that will become problematic. But like I said, that's for another day right now. So that's kind of what's driving them. He's been asked if they're worried about a bubble, and he was asked this at his press conference last week, and he went out of his way to avoid the question, because the answer is kind of yes, they're very worried about it, but they're not going to do anything about it. They're not going to stop just because they think that the market might be overvalued at their hand, because again, they think higher stock prices creates confidence, creates jobs, creates GDP, and that's what they want. That's their modus right now.
Hey, Jim, do you and Juliet think this is going to end badly? I mean, maybe just you. We'll leave her out of it.
No, she's definitely in the camp that it's going to end badly. She can scratch my eyes out over it right now.
Right.
But yeah, I think eventually it can. There's a real risk that it can. But that's down the road is where this ends badly, because you've disconnected the financial markets with the economy. And you've done that purposely. Look, you've got the Federal Reserve buying corporate bonds, buying ETFs, buying bonds. Powell said yesterday, we don't want to be an elephant in the market that kind of snubs out price discovery. That's exactly what they've done to this market, and they've done that on purpose. So yeah, I get it. The market's going up. I can moralize about this. That's what your question is. Moralizing, is this going to end badly? Yes. But I can also be a realist and say, boy, they've got a lot of firepower. And if they want this to go up, I'm not going to stand there and yell stop and get run over by it.
Hey, Jim, Miles here. You mentioned Dave Portnoy earlier, and I think that the rise of the day trader and how much money that is in the market if they're pushing stocks around. When you look at that phenomenon that's kind of come up in the last month, one, how important do you think it is in the daily market narrative? And two, what do you think is driving that seeming enthusiasm? Is it just that Portnoy is so kind of charismatic and his followers want to do what he's doing, or is there something else maybe driving retail participation right now?
Yeah, to take that second part, I don't think it's really Portnoy. I think he's just a symbol of it. It really started last year when they cut commissions to zero, and then we went to fractional share purchases so you could buy less than one share. So all of a sudden now, the frictions of trading is off. Even if you've only got $1,000 and Amazon's $2,600, you could buy a tenth of a share for $260 and no commission on that. So that put it in place. The first indications of this was the biggest amount of account creations at the online brokers in history was March. The collapse in the market, they came in. Why? Because for 10 years, they've heard FOMO, fear of missing out, and TINA. They really believe that. They looked at March and they said, here's my chance. I've set this out. Here's my chance to get in. Then you throw in the Fed basically putting a floor on the market and basically telling people they're going to use all their might and power to make markets go up. And you get a guy like Dave Portnoy screaming that rule.
Hey investors, Zach Guzman here. Are you interested in learning more about the markets and getting the latest financial news? Well, then click right here to subscribe to our Yahoo Finance YouTube channel. Get the latest up-to-the-minute market analysis, big interviews in the world of finance, and information on how to manage your money every day wherever you are.